Hey, I'd like to welcome you to another episode of the Mission Matters Money Podcast, your source for all things money. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres. Keep up with my book releases, book tour schedule, signings, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of my upcoming books, just head on over to the website, missionmatters.com, and click on Become an Author to apply. All right, so today I have Sonni Sabahi on the line. He's Managing Director over at ICM Capital Markets. Sonni, welcome to the show.
Hey, thanks for having me on, Adam.
All right, so excited to talk about some investing, saving money today. I mean, we got a good show planned. But before we get into some of those nuances, let's get a little bit more into what you're doing over at ICM. So tell us a little bit more about the company, please.
Sure. Well, ICM is a money management firm. It was really founded in 2009 after the crash of the financial markets, really as an opportunity fund to take advantage of all the distressed opportunities that were out there in the capital markets, like real estate, loans, and other discounted items.
So what kind of asset classes do you focus on today?
We're primarily a real estate-based firm. We tend to buy real estate, mortgages, loans that are all collateralized by real estate at a discount.
Talk a little bit more about what that looks like. Because some of the people listening, for one, I think the wholesale loan market is a great way for investors to potentially diversify their portfolios. But, not everybody, it doesn't get all the attention, right? There's not people on CNBC all day following the market, and it doesn't get some of the fanfare. So I think a lot of investors just don't even know that market exists.
Yeah, you would be accurate with that assessment. And, primarily because I think everybody's so focused on equities, stocks, they tend to miss the mortgage or the note business altogether as a whole. So for us, we tend to either lend, we do some hard money lending where, there potentially somebody has equity in their property and they need some cash for a business, for maybe doing improvements, for whatever purpose they may need that money, but they don't qualify for conventional means of financing. So we will go ahead and lend them that money based on the equity in their home at a decent rate of return. That's above average than typical banks, somewhere between 7 and 12%, depending on the risk of the loan that we're making. In addition to that, we're very active. We buy distressed loans from banks, other funds that need liquidity. So just like in the 2008 financial crisis, there were a lot of banks, institutions that were holding on to these assets that needed cash. And those times, we're the guys that they would go to. We'd buy these assets at a significant discount to current market value. And generally, we would work through those assets, liquidate the underlying collateral, provide a healthy return to our investors.
Let's talk a little bit more about your investors. So there's some people listening right now that are like, oh, man, this is interesting. What type of investors are usually the right type for your firm?
Well, we take on a lot of different investors. I would say whether the right type for our firm would be the type of investor that anybody would want to be. We prefer an investor that understands what they're investing in. The great thing about our asset class is most investors or most people out there understand it because everybody, not everybody, but most people have either owned a home at one time or currently own a home. So that is a good foundation to invest with us because we're a residential real estate investing firm. So you already have kind of a basic understanding of how things work, opposed to investing in a mutual fund or calling up your traditional financial advisor who's going to put you in a range of different equities or stocks that you may not even understand or have any idea of what you're investing in. But generally, as an investment rule, what I tell all our investors or anybody who's looking to invest is really, don't ever invest in anything you don't understand. So whether it's us or, you're going to invest in a stock, make sure you do take the time to understand the company that you're investing in, what their specific strategy is, because blind investing, in my view, never does anybody any good.
What are some of the hold periods? So again, we're not going to get too technical on specific products, but just so people have an idea, it's not like a CD, you're not holding it for, it's not like a 1 month CD or some other things. What are some of the hold periods, and what is a general length of time that some investors are with you?
Sure. Well, it really depends. We have different investors who have different needs, and we have different strategies. We're not a one-trick pony, so to speak. So, but I'd say, most of our investors are about 2 years. They have a 2-year lockup period. So it really depends. Some investors want cash flow, so we'll invest in assets that that spin off cash every month, and they like to live off the yield that they're getting. Others, kind of want to take more of a more aggressive risk profile. Well, we'll go ahead and invest in something that is defaulted, where potentially a borrower who has a mortgage hasn't paid the bank for a year or 2 years. The bank has held onto this asset, and at this point they're ready to get rid of it. We will, offer them a pretty significant discounted price, potentially 50 to 60 cents of a discount on what they've lent. And it may take us some time to work through that asset, whether it's commercial or residential. We have to foreclose. We offer the borrower that's currently in the home different opportunities to either work with us. If they don't, then we have to, continue down a legal path. And that's just going to take a lot more time. But again, it really depends. But I'd say on average, somewhere between 2 and 3 years.
Any kind of trends or opportunities that you're noticing in today's marketplace?
Yeah, I would say right now, in particular with what's happening with the coronavirus, there's quite a bit of uncertainty in the capital markets. I'd say right now I'm currently seeing guys who are looking for liquidity, who are looking to sell off some of their assets at a discount. We're currently trying to assess a strategy to be able to take full advantage of what's happening right now.
Awesome. So, Sonni, if somebody's listening to this and they want more information on ICM capital markets, what's the best way for them to reach out?
Sure. They could go ahead and visit our website first and foremost. It's www.icmfund.com. And they can always email us at info@icmfund.com.
Fantastic. Well, hey, Sonni, really appreciate you coming on the show today and teaching us more about what you're doing over at ICM and how you're helping your clients. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. Hope you learned a lot. If you did, don't forget, subscribe to the podcast. If you're watching this on our YouTube channel, Mission Matters Money, definitely give us a subscribe there and leave us a comment in the video section. Let us know what you thought about it and what kind of investments and things you're working on. Love to connect with you there. And Sonni, thanks again for coming on the show.